Tyson Foods, a deep dive into a dividend income opportunity and long-term investment potential. Welcome back to the channel. Today, we'll be diving into Tyson Foods, a company with a storied history and a global presence in the food industry. Hey everyone, welcome to Market Visionary. I'm just starting out and I need your support. If you're enjoying this content, please hit thumbs up and subscribe. As a thank you, I'm offering gifts to my early supporters. Just comment, subscribe, take a screenshot, and email it to the address in the description. You might get a special reward. Thanks for being here. Let's grow Market Visionary together. Tyson Foods is an essential player in the consumer staples sector, specifically in meat production, and offers an intriguing opportunity for both dividend income and long-term growth. With a dividend yield of over 3%, a history of operational resilience, and clear growth drivers in its chicken and pork segments, Tyson Foods may be an undervalued gem in today's market. Let's explore this in greater detail and break down why this stock deserves a closer look, especially in today's uncertain economic climate. The Tyson Foods legacy, a global food giant. Founded in 1935, Tyson Foods has been a key player in the meat production industry for nearly a century. The company operates in 4 primary segments: beef, pork, chicken, and prepared foods. Tyson has established itself as a household name in the U.S. with brands like Jimmy Dean, Hillshire Farm, and State Fair, while also expanding its operations to a global scale. With a presence in 16 countries across 5 continents, Tyson Foods is truly a global brand, feeding millions of people worldwide. This geographic and product diversification is one of Tyson's key strengths. It allows the company to tap into a variety of markets and mitigate the risk of over-reliance on any single region or product category. This is especially important in today's uncertain economic landscape, where shifts in consumer demand can occur rapidly due to factors like inflation, changing dietary preferences, or geopolitical instability. Tyson Foods' financial turnaround. A promising fiscal year 2024. Tyson's fiscal Q3 results showed a marked turnaround, providing a positive outlook for the remainder of 2024. Revenue for the quarter grew year over year to $13.35 billion, and net income bounced back to $191 million, following a prior net loss. This drove a positive EPS, earnings per share, of 54 cents, which was a significant recovery compared to the same period in the previous year. Despite this positive financial performance, Tyson's stock has lagged behind the broader market. Over the past year, the stock has underperformed the S&P 500 by around 8%. In the consumer staples sector, which Tyson is part of, performance has been mixed, with the sector ranking 7th among market sectors in terms of one-year performance. This could suggest there is still room for Tyson's stock to rise, especially as more investors recognize the company's potential. However, it's also important to acknowledge some of the challenges Tyson faces. The company's guidance for fiscal year 2024 suggests flat sales growth, with some improvement expected in the pork and chicken segments. The beef segment, however, is projected to decline, which may raise some concerns for investors. Still, the company's diverse product portfolio, spanning across multiple types of meat, helps mitigate some of these risks. Economic factors at play. Recession and inflation concerns. One of the key factors affecting consumer product stocks like Tyson Foods is the potential for an economic recession. Some economic models, such as the New York Federal Reserve's recession probability model, suggest that there is still a significant chance of a U.S. recession in the next 12 months. The exact percentage varies depending on the source, but some estimates put the probability as high as 60%. On the other hand, inflation has been steadily declining from its 2022 highs. This could benefit Tyson Foods by lowering input costs and making meat products more affordable for consumers. Inflation trends are crucial to keep an eye on, as they directly impact both consumer spending and corporate margins. If inflation continues to fall, Tyson could see an improvement in both sales volume and profitability as consumers feel more confident about spending on groceries, including meat products. The meat of the matter, key product segments and growth drivers. When it comes to Tyson Foods, their performance is heavily tied to the meat production industry, particularly in their 3 core segments: beef, chicken, and pork. While beef production is expected to decline by about 2% in fiscal 2024, both the pork and chicken segments are showing signs of growth. In the pork segment, USDA projections indicate a 3% increase in domestic production for 2024, which is expected to generate an operating income of between $100 million and $200 million for Tyson. The chicken segment is also projected to remain flat in terms of production, but Tyson anticipates an operating income of $850 million to $950 million from this segment. This indicates that while the company is facing challenges in the beef segment, the other two segments are poised to drive future growth. It's worth noting that meat consumption continues to rise globally, driven by population growth and changing dietary habits, particularly in emerging markets. According to estimates, global meat consumption could reach over 570 million tons by 2050, nearly double the amount consumed in 2008. This long-term trend bodes well for Tyson, which is well-positioned to capitalize on increasing demand for affordable protein sources like chicken and pork. Stock price analysis: undervalued compared to peers. Let's talk about Tyson's stock price. Since October of last year, the stock has risen by about 21%, but it still trades significantly below its 10-year high. Currently, Tyson is hovering around its 200-day moving average, which suggests that there may be upside potential left in the stock. It's also worth noting that the company is trading at a valuation that makes it attractive to value-driven investors. Comparing Tyson's forward price-to-earnings (PE) ratio to its peers, it appears undervalued by about 8%. When looking at forward EBITDA, enterprise value to earnings before interest, taxes, depreciation, and amortization, Tyson is undervalued by approximately 27% compared to its peers. This undervaluation could present a compelling buying opportunity, especially for long-term investors who believe in the company's growth potential. One possible reason for this undervaluation is a combination of weaker sector momentum and concerns about consumer product stocks in general. However, given Tyson's strong brand presence, global reach, and diversified product portfolio, the lack of confidence in this stock may not be fully justified. Dividend growth and income potential. One of the most attractive features of Tyson Foods for income-focused investors is its steady dividend growth and attractive yield. As of this recording, the dividend yield stands at around 3.35%, with the company paying out 49 cents per share each quarter. Tyson has a strong track record of increasing its dividend annually for the past 10 years, making it an appealing option for investors looking for reliable income. Furthermore, the company's dividend payout ratio is around 76.4%, meaning that just over 3/4 of its earnings are being returned to shareholders in the form of dividends. With a positive outlook for earnings growth in the upcoming fiscal year, Tyson's dividend appears to be both sustainable and likely to continue growing in the future. Debt levels, a manageable concern. No analysis would be complete without addressing Tyson's debt levels. The company has a debt-to-equity (DE) ratio that is relatively low compared to its peers in the consumer staples sector. While Tyson's long-term debt has grown by about 9% year-over-year to $9.7 billion, this is manageable given the company's total assets of $37.7 billion. In fact, Tyson's debt levels are lower than some of its key competitors, which suggests that the company is better positioned to handle any potential economic downturns or interest rate hikes. Additionally, with the Federal Reserve recently cutting interest rates and more cuts potentially on the horizon, Tyson's interest expenses on its debt could decrease in the coming quarters, further improving its financial position. SWOT analysis, a balanced view of Tyson's prospects. To sum up, let's take a look at a SWOT analysis: strengths, weaknesses, opportunities, threats for Tyson Foods. Strengths: a global brand with a diversified product portfolio, strong growth potential in the pork and chicken segments, solid dividend yield with a history of consistent growth, low debt-to-equity ratio compared to peers. Weaknesses: negative profit margin compared to peers, primarily due to challenges in the beef segment, some uncertainty regarding consumer spending in the face of potential economic recession. Opportunities: global meat consumption trends provide long-term growth potential. Falling inflation could lower input costs and improve profitability. undervalued stock price relative to peers, presenting a potential buying opportunity. Threats: the possibility of a recession could impact consumer spending, particularly on non-essential grocery items. Fluctuations in meat production and pricing could affect revenue, especially in the beef segment. Final thoughts: a strong buy for long-term investors. In conclusion, Tyson Foods offers a compelling investment opportunity for both dividend income seekers and long-term growth investors. The company's strong brand presence, global reach, and diversified product portfolio provide a solid foundation for future growth. While there are some challenges ahead, particularly in the beef segment, Tyson's strengths in pork and chicken, along with its attractive dividend yield, make it a stock worth considering. If you're looking for a stable company in the consumer staples sector that provides consistent dividend income with potential for capital appreciation, Tyson Foods should be on your radar. Let me know what you think in the comments below, and as always, don't forget to like and subscribe for more in-depth stock analysis and market updates. Thanks for tuning in, and I'll see you in the next video.